Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We're invited to send us questions to info@creshow.com. Each business day, I answer a question on video, and we post it to the Twitter account, Ask Michael Bull, and the YouTube channel, Commercial Real Estate Show. You can also see it at the tab Answers at our new website, commercialrealestateshow.com. Well, today we're exploring retail and retail real estate with Mike Pouline and Robert Franson. And guys, let's talk about investment properties a little bit. You know, Robert, what are you seeing in the investment sales market for the availability of core assets and value add assets for acquisition?
Well, I think Dan spoke to the core pretty well in terms of there's a tremendous amount of capital chasing those deals and compressing yields even more so than in years past. The interesting change we've seen has been more on the value add side, where that was definitely a core piece of Coro's portfolio the last couple of years, just to buy shopping centers that were maybe half empty and try and backfill them and re-tenant them. The low-hanging fruit of that stuff is largely gone. What we're finding is that the people are paying today for what they think they can do with the center 2 years from now. And that's compressing yields even on the value add side. Where I think there are still some opportunities on value add might be, larger scale deals, whether you're buying a portfolio from a lender that's trying to unload $500 million worth of real estate in one shot, or maybe you're buying larger assets. But at least in the stuff that we had historically done, which was sort of the 90,000 square foot and under shopping centers, it's become really tough to find any value add deals.
Yeah, I think I would agree with that. For us in particular, I mean, we've recently purchased a couple of value add deals. We purchased a 500,000 square foot shopping center in Milwaukee. We're under contract to buy one in New Jersey. We are seeing a lot of stuff in Baltimore that we're working on. So I'm really encouraged by what I'm seeing on the value add side still, especially in terms of the bigger size projects that that are coming across our desk. So
all right, and Robert, you guys may be paying all cash for these things, but what do you see out there for lender interest in retail? I know a few years ago you'd say retail and a lender would shudder, like, no, I'm not touching that. What about now?
Yeah, it's been very encouraging. I mean, quality, clearly the leverage has gotten more aggressive. I think it depends a little bit on who you're talking to, but on any kind of stabilized asset, CMBS, they seem to be competing mostly on leverage. They're a little bit more expensive. Life insurance companies, you can't get quite as much money from them, but they'll lend it to you at a lower rate. But even on the value add deals, I mean, we're seeing non-recourse debt for assets that don't have enough money in place to cover the debt service, which we hadn't seen historically. They're just putting aside, like an old construction loan, you put an interest reserve aside. We're seeing limited recourse on some assets where, for instance, it burns off after you hit some benchmark. Pricing has gotten more aggressive, leverage has gotten more aggressive, and the number of players entering that sector is also interesting, where it used to really just be banks. Now it's become small life companies, it's become funds that are setting up mezz debt, those sorts of things. There are a lot of different capital sources on the lending side.
Okay. One of the things I would also just add to that is I think that I'm seeing lenders turn around information and approvals much quicker than just a few years ago. So I'm really encouraged by that. For a long time it was very difficult to get SNDAs, get waivers, get things of that nature. Just took forever. And I'm really encouraged by the lenders that we have, at least, about the speed at which they're turning things around.
That's great, and our fun has to end here in a moment. Can you give us a quick tip for our listeners, Robert?
I'd say watch the balance sheet and watch the leverage. Let's learn the lessons from the last recession, where 80% loan to value may look great on paper, but doesn't leave you a lot of room for error.
Okay.
Yeah, and I would just say, if you're in the retail real estate business, stay true to who you are, find your niche and what you're good at, and just try to be the best that you can. You're not going to be all things to all people. This is a very niche-y business, so figure out what it is that you excel at, and stay true to that.
Well said, gentlemen. Thanks for joining us today.
Thank you.
Thanks.
For more from Mike, visit dlcmgmt.com for management. And for Robert, visit cororealty.com. And you're invited to join us next week. We're going to look into the management investment tips related to multi-family properties. It'll be a good one. Thanks for joining us today. I'm Michael Bull. Until next week, be sure that you always lead, learn, and laugh. And join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators. France Media, publications and conferences, Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.